Broadcasting from the Business RadioX studio in Orlando, Florida, it's time for Regions Business Radio Orlando. Regions Business Radio Orlando is presented by Regions Bank. Brave the beginning. Member FDIC.
Welcome to Regions Business Radio Orlando, presented by Regions Bank, member FDIC, and an equal housing lender. I'm your host, Scott Wall. I'm a commercial banking leader with Regions Bank here in our Central Florida market. We are broadcasting live from the Business RadioX studio inside the Marriott Hotel in downtown Orlando, Florida. And my guest today is my friend Bruce Matzner, who happens to be the Chief Financial Officer of PepsiCo's South Division, based right here in Orlando, Florida. Hey, Bruce, welcome to the podcast.
Hey, thanks for having me on today, Scott.
So let's start, Bruce. I know you've got many years at PepsiCo. Maybe talk about your background and where you are today.
Yeah, sure. So, I've got about 30 years of experience. I actually started my career at KPMG. I spent about 3.5 years there, and from there I took a role at PepsiCo, and I've actually been here ever since. It's been a great journey for me. I've been at the company 26 years now. I spent about 3 or 4 years, started in North Carolina, which happens to be the birthplace of the Pepsi brand. And then I spent about almost 9 years in our corporate finance function. And I've been down here in Orlando, Florida as our operating CFO ever since.
Take a couple minutes, Bruce, and talk about the size and scale of the South Division, reach, footprint, any description about the business to frame out our discussion today.
Yeah, sure. This is it's a multi-billion-dollar operating division. It's a big division. It's actually our largest division in the country. And actually, we're proud. We were just recently awarded a Best Place to Work designation by the Orlando Business Journal. That's something we're really proud of.
Congrats.
Yeah, and our footprint, spans from I'd say the Mid-Atlantic area, what some would call the DMV area, the Mid-Atlantic, all the way down to South Florida. And then really across the Sun Belt all the way over to Louisiana, and then I'd say kind of a diagonal line back up through, call it West Tennessee. And so it's operationally intensive. We've got, 15,000 employees in the division, 100 distribution warehouses, 14 manufacturing facilities. And we're essentially we're a DSD business, meaning that, we deliver directly to the stores, we merchandise in the stores. How we describe it is that we're the make, sell, deliver arm of PepsiCo within North America. And then right here in Central Florida, just our footprint here is about, it's about a 35 million case business. So our footprint is pretty big here. We've got 1,400 employees just here in the Central Florida area. And I think, when people think of PepsiCo, they know some of our product portfolio, right? They know Pepsi, they might know, Mountain Dew, but they're also, some folks don't know that we also distribute Gatorade, Starbucks coffee, Lipton ready-to-drink teas, Aquafina water, and we've also have Celsius and Rockstar energy drinks. So we kind of feel like we have something for everyone.
Yeah, that's a really big footprint locally. And so you and your finance team, Bruce, managing this business, be interesting to hear about how you did pre-COVID, maybe during COVID, and kind of where we are today in the operating environment. So maybe speak a little bit about what the business looked like from your perspective pre-COVID.
Yeah, it's interesting to think pre-COVID. I mean, it was only a couple of years ago, and it feels like a long time ago now. But it was only several years ago, and I think that's probably the best way to think about it and frame it up is if you start with the pre-COVID environment. Let me start with the consumer. Right, because that's for us, we're a consumer products company, so we're always focused on the consumer, meeting their need state. And you think about the consumer pre-COVID, it was a consumer that was seeking variety, looking for different things, health and wellness, and on-the-go lifestyle, out and about a lot. And if you think just about the external environment we're operating in, it's hard to, I think now, given where we are, it's hard to imagine. We were in a very, very low interest rate environment back then and with benign inflation. So, it was just only a couple of years ago, that was the case. And so when you think about that, our strategy really for growth was was really about, gaining share through innovation and through executing in the marketplace, making sure we've got the right product, right place to meet the consumer needs. And because of low interest rates, right, we were investing. We were investing in the business. And if you think about the financial focus then, it was what we called, we were talking to the organization about was just generating the right returns. The organization heard me talking a lot about ROIC, or return on invested capital, because we were putting a lot of investments in marketing. We were putting investments against people and structure. We were investing in growth with our customers. And so that was really our focus pre-COVID was, hey, let's make sure that, we wanted to grow. We were putting investments out there and wanted to make sure we got the right returns on those investments.
Let's fast forward to March 2020. COVID happens. I suggest this probably quite the paradigm shift for your business and many other small and large businesses around this country and world, right?
For sure. So I think it's not a new term, but the term we had introduced during that time was VUCA. It's not a new term, but certainly I think when COVID hit, it was a term that was certainly very appropriate.
VUCA acronym, right?
Correct. And again, it's not a new term. It stands for volatility, uncertainty, complexity, and ambiguity. And I think it's a great way to just sum up what every business was dealing with during COVID. And when you think about that environment we were operating in, first of all, just keeping everyone safe, keeping our employees safe. I think the government would have called an essential business, right? Keeping food and beverages on the shelf. That was just one challenge in and of itself. The second piece was, I think everybody saw it. Toilet paper was an interesting one, right? In that these consumer shifts, right, in terms of, the way that consumers were shopping and consuming completely changed overnight with shutdowns and so their lifestyles changed and that completely changed the demand for of the products they were looking for across all consumer companies, but ourselves included. And then, we were also dealing with liquidity challenges, right? And so, there were certain customers that were struggling and, some customers, unfortunately, went out of business. A lot of restaurants, we saw that in that space. Then there was also just the uncertainty of supply chains. I think a lot of companies experienced this, and some of it, I think internal, but a lot of it external factors, right, in terms of where raw materials were coming from, just where anything you were purchasing, goods, there was a lot of uncertainty of, hey, when would things arrive? And so you didn't know if your employees were going to come to work. You didn't know if you were going to have the raw materials to make your products. You didn't know if your customers were going to be in business. And then there was just the uncertainty of, well, how long is this going to last? I think there were, none of us had experienced a pandemic probably in our lifetimes or working careers. And there were lots of, I think, comparisons back to the Spanish flu and the curve of that and what would happen and when would vaccines become available. And so there was just the uncertainty of that. And if that wasn't enough, 2020 here, just in this part of the country, was one of the most active hurricane seasons.
Of course it was.
Because we didn't have enough to deal with. If you remember, they ran out of alphabet names. We went to the Greek letters. So I think VUCA may have even been an understatement, but that was the environment.
Well, and I'm thinking of the size and complexity of PepsiCo, right? Not just here, worldwide. So maybe speak a little bit about specifically, Bruce, the business strategies that you guys put in place to manage this frigate in the harbor having to turn it.
So I would say that, first for us was just people, right? We've always said we're a people business, but, for us, it was about, one, how do you, I mentioned earlier, how do you keep your people safe? I mean, we had folks that had to go out into stores, folks coming to work. And then how do you make it so that folks are able to come to work with kids, home from school, or maybe even, other family members that may be getting sick? So we created some good policies and guidelines on, helping people be able to navigate that. We gave out a lot of PPE to keep people safe. But essentially, I mean, we had to, for lack of a better term, we had to tear up the playbook. I mean, it was early, it was kind of towards the end of the first quarter, second quarter of the year when this happened. And so, we had just kind of rolled out just several months ago, right, our annual plans for the year. And we basically had to tear that up and start over and say, hey, you know what we thought was going to be the environment had to change. So we completely replanned the business, and that required a lot of resource allocation changes. We moved investments out of places that didn't really make sense. There were certain marketing investments we simply didn't need to make anymore. There were probably, there was travel and expenses. No one was traveling. We didn't need to, use the money there. And so we repurposed a lot of those resources, certainly to benefits, PPE, and then also investing in the community to make sure that we were working with our business partners to support the local community. And then I'd say that one of the things that was really important was communication. We were holding, daily calls as a leadership team and really making sure that we were communicating all the way down to our front line. That was really, really important because everybody was dealing with all this uncertainty. So this notion of communication and empathy was really important for us, to keep the business moving forward. And then with all the supply chain issues we were dealing with, and then just all the uncertainty of just being able to operate the business, we really had to spend time reducing a ton of complexity. So there were lots of SKUs that we just decided, hey, you know what? We stopped making them for a while. One, because sometimes we just couldn't get the ingredients, but more importantly, just given all the demand, it was more efficient for us to focus on, the core SKUs that we had. So reducing complexity was really important. And then I'd say we did a lot of training with our teams around just agility. That was really important to say, hey, you know what? We're all dealing with this. And we just need to remain agile. You never know what's going to come at us, but this notion of agility, I think that's kind of a new buzzword coming out of COVID in terms of running a business. And then when you think about our financial focus, ROIC obviously always being important, but we really spent a lot of time during that period talking about cash flow. With liquidity drying up, from a banking standpoint, we spent a lot of time educating our teams around working capital and cash flow, especially in that first, I'd call it 6 to 9 months of COVID, just given all the uncertainty and making sure that, we were being really, really careful with our working capital.
I'm just thinking about the size of the overall operation with, the different disciplines, manufacturing, marketing, distribution. I'm forgetting some, I'm sure, but that must have been a heck of a time.
It was. And that's why I said, I think, the communication was really, really important, keeping everybody on the same page, because even though we had to redo the playbook, it's not like we just threw out one playbook and created a new one. I mean, every week we were learning something new, and that's where the agility came in, and we had to, we were, constantly adjusting the playbook and making sure then that we were getting that communication out to our folks.
So here we are, let's call it 3 years later, right? I'm sure you and the team learned a lot of lessons and maybe did put in place new business practices that still survive today. But speak, Bruce, a little bit now about how does the current operating environment look and how have you guys adapted to this, let's call it new normal?
Yeah, well, I mean, like I said earlier, it's hard to believe that, it's only been a couple of years and think about how much has changed. I think the VUCA acronym still applies, but, maybe not to the same degree. But it's so interesting how dynamic the external environment has become, right? Consumers certainly trying to move back, right, towards a new normal, right, and how they behave, how they shop, what they're doing. I mean, obviously people getting out and about. But then you think about, the environment now. When we started pre-COVID, low inflation, low interest rates. Now we're in an environment of high inflation, high interest rates, unemployment at all-time lows, very different. And then, just the patterns, even though consumers are trying to go back to their, I'd say, pre-COVID lifestyles, those patterns, still have changed, right? I mean, not everybody's completely back to work. And so, we're seeing some things shift back, but then other things, I'd call them maybe modified consumer behaviors. So I think we know the kind of where we sit today. So our strategy is really, okay, well, we're kind of migrating a little bit back towards where we were pre-COVID. We're always trying to gain, consumer share. So we need to make sure we've got the right products, right place, right time for everyone. And then making sure that, hey, when we're consumers shop, that we show up. It's a very competitive marketplace, so we want to make sure that we show up better than anybody else. We're bringing back, I'd say engaging marketing plans that maybe we tapped the brakes a little bit during COVID. We're keeping, the employee engagement piece becomes really important, especially, in a low, in unemployment environment. We've always been that way. That's why we're really proud to, to get that designation from the Orlando Business Journal. But with inflation now, the pricing becomes really important for us, right? To making sure that we're covering that input cost. Productivity, we try to balance the two, right? Make sure that we're being completely as productive as we can be. But, given all the inflation, again, every company, across the space and even in all the industries has had to take pricing to cover their costs. We're still looking for ways to say, hey, we learned a lot during COVID around the cost of complexity. And so we're always looking for ways to say, hey, let's not let that complexity all the way creep back into our business. So we're trying to, to manage that because we know there's a hidden cost of that. And I think, COVID also exposed for a lot of companies, the supply chain. We're trying to make sure that, hey, that we have the right strategies in place to make sure that we can handle supply chain disruptions. We're not going to think that something like this can't happen again. So that's kind of where we are from a strategy standpoint. And financially, what we've been talking about and educating everybody on is when you're in now this kind of high cost of capital, high inflation environment, is this notion of margins. And so, we started pre-COVID on returns. That's always that's always important. Then we got to the COVID and we were really talking about cash flow. And now, kind of this, I call it the post-COVID world now, is we're really, spending a lot of time talking about operating, gross margins and profit margins.
So let me double click on that, maybe the new playbook, lessons learned. But for you personally, are there a couple, a handful of lessons that you're thinking about relative to the last 3 years?
For sure. I mean, it's interesting if you Google VUCA, there's some good, I think, what would you call them? They're just little pictures or GIFs out there that you can, on Google Images around the antidote to VUCA is VUCA, which is, is this notion of having vision and understanding and clarity and agility. So the antidote to a VUCA environment is just a different set of VUCA acronyms. But I think what we've learned and we've always said this, but we certainly COVID has reinforced this, is this notion of always being people first. We're really spending a lot of time on safety, communication, making sure that we've got the right environment for our employees, always remaining focused on our consumers and customers. That's the lifeline of our business. I talked about agility. You almost have to expect the unexpected. I think we've built new muscles, and I think a lot of companies have probably built new muscles. I talked about complexity, and at the end of the day, we just try to control the things that we can. Right? There's always going to be these external things that are going to come up, so we try to control the things that we can control and remain agile. Those are, I think, are the key learnings for us. And this might be slightly redundant, Bruce, but think about Central Florida. There's thousands of small businesses, right? Family-owned, multi-generational, small businesses. You're coming from a really large company, but I presume that some of the lessons that you're speaking about would be applicable to small businesses. So if anybody's listening to this that runs a company, anything you might want to hit on relative to that dynamic? I think it's, stuff that I mentioned earlier, just to kind of pull it together, is that, we've been very consistent in our messaging. I mean, I think all companies, and even at a personal level, but all companies, we all need to have revenue growth. We need to be really good at managing costs. That's just a given, right, to remain viable and remain profitable. But for us, I think when I think about the last, 3 or 4 years, the financial excellence principles, besides just, hey, growing your revenue and managing your costs, is this notion of ROIC, or returns, cash flow, and profit margins. I've been preaching that because those really become, what I would call the accelerants of growth. If you could maximize the efficiency of every dollar you earn, maintain strong working capital and cash flow, and generate, above average returns that exceed cost of capital, well, boy, that's a place where you'd want to invest your money, and then that just, becomes a very good virtuous cycle for growth.
Well said. Let me pivot, Bruce, a little bit. Aside and alongside the many consumer brands that PepsiCo distributes and sells in Central Florida, you guys do a lot of philanthropic efforts too. Can you speak a little bit about the presence there?
For sure. This is, again, I've been, with the company for over 25 years. One of the things that you love about, a company like PepsiCo is that for as big as we are, we still operate very locally in local communities. And what I love about the company is that the company just gives us the bandwidth to do a lot of different things. So there's things that we do that I would call larger scale things, and there are some things that we do that are, done locally by our teams, and then there are some things that even just the company allows employees to kind of just get beyond their own causes. A couple of big things that we do here. We've partnered with a lot of different local organizations on youth food insecurity. So working with big brothers and big sisters on that, packing meals and making sure that underserved youth have the ability to just have the right nutrition and food security to have a good day, whether that be in the summertime or even getting ready for school. We spend a lot of time with local communities on water sustainability, We're working actually with 4 Roots on agriculture here, just locally with that team. We do education grants for trades with local community colleges. We actually have a really cool program that we started. It's called a returnship program, which is, for women who have, maybe exited the workforce to maybe, pause to maybe raise a family, or maybe something else came up from a family standpoint to get them trained and back into the workforce for those who want to come back. And then, we have employee resource groups that all have their own causes. We've recently done a lot of back-to-school drives. Sometimes we partner with some of our local sports teams, the Magic in particular. And then any cause that an employee wants to get behind, the company through the foundation or even locally will support things like breast cancer awareness or spending time at the food bank or things like that. And then, we jointly serve on the board of Goodwill, and the company, again, just creates the space. So we can talk forever on all the community things, but it's one of the things you love about it is that for as big as we are, we give people kind of the bandwidth to do what's important for them and do some great stuff in the local community.
That's not only is it great stuff, it's really important stuff. So thank you for all that work here in Central Florida and beyond. I know that a couple of your passions are your family and the Buffalo Bills, and we can debate the order. But also, I know that you're a big proponent of financial literacy, personal financial literacy. And this is something that I think you speak to within PepsiCo, within your own company. And I think you're also involved in the community. I know you are with Goodwill. Maybe talk a little bit about where that passion comes from and about that for our listeners.
Yeah. Well, first, I am a family first person, but thanks for the space for me to say go Bills.
You got it.
But yeah, financial literacy is a personal passion of mine. I've come from a very modest background, and I feel very fortunate to have, been educated, in finance, but also have some good, I'd say some mentors along the way who have really helped me make good decisions. I've spoken with, it runs the gamut. I've spoken with, youth groups, and I'd say with teens. I've spoken internally at meetings and conferences with, I'd say, professionals. Every time I talk about this topic, it's very, very clear that, there's a big opportunity for us to do more in this space. And we jointly serve on the board of Goodwill. There's this, one of the missions that we're doing is this notion of prosperity planning and really helping folks make better financial decisions to achieve their personal goals. And no matter which space I talk to folks about this in, it's very, very clear that there's just a huge yearning for education in this topic. It's a passion of mine. I know there's a need for it. It was nice to see, actually, I think that, locally, they're now going to require that back in the schools, but I think we've probably missed a good, call it, decade or two. So there's a huge need for this, and I'm all in.
I think I know the answer, but why is this so important personally?
Yeah, when I think about just literacy in general, one of the things that I'm going to talk about the company standpoint and the personal side of it, is that from a company standpoint, we really preach financial literacy. My team has heard me say this about 100 times, is that, we're a sales and marketing company. I say, the best salespeople we have are really good at finance, and the best finance people we have are really good at sales. And so, selling our ideas and making people literate is important. But from the selling standpoint, we know that when we educate our teams, and even on the operations side, we educate our teams on financial literacy, it actually drives better decision making and better results. When you translate that then to just then the personal side of it, I think we've all seen the statistics, right? I mean, credit card debt's at an all-time high, limited savings, people living paycheck to paycheck, and that's not being helped, right, by inflation and housing. And so we know there's, work to do in this space. But I think as we educate people, it's really just helping folks make, the same way a company would make better decisions, just helping folks make better decisions for themselves to achieve their goals, whatever those might be.
Well said. And as we end here, Bruce, maybe a handful of tactics that folks can consider. I mean, easy stuff, right?
Yeah. And again, you folks in the organization will chuckle when they hear this, but, the first thing I always talk about is what I call the 5 Ps. And my kids hear me say it too around there are 5 P moments in life, and the 5 Ps are, proper planning prevents poor performance. And so when it comes to financial goals or personal goals, think about them and, put time into, planning. Right, not winging it, and so planning is important. And when I talk, personal finance, I also talk about the 6th P, which is it's personal. Like everybody's financial and goals are different, And so, when we speak to folks, about financial literacy, it's one is having a plan for yourself, but that plan is yours. Your goals should be yours and not thinking about what somebody else's goals are. A couple of things that we talk about is we all know that the most powerful force in finance is time. Starting early, even if it's small, those things add up. We spend time talking to folks around this notion of, I don't want to sound too technical here, but this notion of balance sheet versus income statement approach to financial planning for yourself. And I saw this even when I, talked to, folks that I know, which is a lot of folks will take an income statement approach, meaning, hey, can I make my ends meet? Meaning that the amount that I'm making is equal to the amount that I'm spending, right? That's the income statement approach. And okay, I'm making ends meet. That's great. But the bigger thing that I suggest people focus on is your balance sheet, which is, hey, what's your net worth at the end of the day? So that's an important concept that we try to teach people. And if you talk to folks at work, they'll hear me say, sweep up the pennies and ride the J-curve. So that's kind of my tagline for personal finance. And this notion of sweeping up pennies is not about being cheap. It's about being frugal and saying, hey, it's understanding needs versus wants and making sure that, hey, do you have something left over, right, after everything's all said and done? And then riding the J-curve is all about then taking that money that's left over, investing it wisely, and letting time, right, the power of time compound. Early in my, somebody recommended to read The Millionaire Next Door. I thought it was a great book. It's something I still live by. I recommend people read that.
Classic.
So, yeah.
As a banker, I'm a huge fan of a strong balance sheet. I think you know that. Great stuff. And Bruce, thanks for taking time with us today on the podcast. Thanks to PepsiCo for all the community work here in Central Florida and beyond. So really appreciate it.
Yeah, no, thanks for having me today, Scott.
I'd like to thank our guests and our listeners to Regions Business Radio Orlando, presented by Regions Bank, member FDIC, and an equal housing lender. You can enjoy our episodes anytime by visiting businessradiox.com and selecting the Orlando studio and then clicking on Regions Business Radio. This program is also available on iTunes, Spotify, iHeartRadio, or wherever you enjoy your favorite podcasts. Please be sure to subscribe to the program so you don't miss any of our future episodes. I'm Scott Wall, and you've been listening to Regions Business Radio Orlando on Business Radio X.
Regions Bank, member FDIC, equal housing lender. This information is general in nature and is not intended to be accounting, legal, tax, investment, or financial advice. Regions believes this information to be accurate when recorded, but it cannot ensure that it will remain up to date. Consult an appropriate professional concerning your specific situation. The information should not be construed as a recommendation of a specific course of action for any individual or business. All Regions products and services are subject to qualification requirements, terms, conditions, fees, and credit approval. Regions reminds its customers that they should be vigilant about fraud and security and that they are responsible for taking action to protect their computer systems. Fraud prevention requires a continuous review of your policies and practices as the threat evolves daily. There is no guarantee that all fraudulent transactions will be prevented or that related financial losses will not occur. Visit regions.com/stop fraud or speak with your banker for further information on how you can prevent fraud.